Okay, so I guess this is welcome to my YouTube channel as I kind of extend or continue my journey as a day trader. Um, so just a little bit of a backstory, I guess. I've been trading, if you could call it that. I've been improperly trading for about a year now, probably like 10 months or so. And I never really I never pushed it with the right psychology, the right mindset, and everything. And now this time around, I found a strategy that I believe is profitable, and I've done some back testing, and it's shown me positive results. So um, I'm gonna take a stab at it and go at it with the right mindset, and stick to my trading plan. And these videos and recording, these screen recordings, all that is to basically hold me accountable, keep me in check. Um, and yeah, I have an Instagram account. I'm making this YouTube channel, and yeah, we'll go from there. So I'll start with my strategy. So essentially, during pre-market, what during pre-market, I'll come in here um, and mark out the previous day's high and the previous day's low, or the previous session high, previous session low, as this will help me for the next day. So when I trade on March the 5th, this is March the 4th, this is the range here. So this is the high, this is the low. This will be my drawn liquidity for my strategy. Um, so it didn't really apply to here, and that's something that I'll get into as well when there's no real drawn liquidity. So essentially, how the setup works is we'll be on the 5-minute time frame here, um, and as soon as market opens, you mark out the two candle range. This is what I'm calling it, the two candle range theory, or two candle whatever. I'm come up with a better name, but this is the strategy that I'm going to be using. So you mark out the range of the first two 5-minute candles. So here we have the low, and here we have the high of the first two 5-minute candles of New York market open, 6:30 a.m. Pacific Standard Time. And essentially, what we wait for is a bearish or a bullish closing body candle out of this two candle range here. And once that happens, that shows us our bias and where we're to be headed for the breakout. And then following the closed body, you're going to mark it in right here. You're going to mark it buy on the open of the candle directly after that, what do I want to call it? Aggressive candle, the breakout candle, whatever. So right after the candle that breaks out and closes outside of this two candle range, you're going to place a sell, or you're going to place a buy, depending on obviously the direction that the market's moving. And then stops go. I've done some experimenting with stops going above the body of the previous candle, the breakout candle, or stops going above the wick of the previous candle, and there's a better success rate. Yeah, you might have to take smaller sizes and go for bigger risk reward, but essentially it's you don't get stopped out as much when you go for the stop loss above the wick of the breakout candle. So going ahead and doing that, again, this is where I said comes in, or when the resting liquidity comes in. If there's no, see, this is the previous day's low. If there's no draw on liquidity, essentially what to do is go for a 1-to-1 minimum. That's kind of what you should be aiming for. So right here is 1-to-0.11, and there's a risk reward of 1-to-1. So you can go here and you can see after 5, 10, 15, 20 minutes, we would have smashed that. And then, yeah, and then we're out. So this works. Oh, I forgot to say one of the confluences here is when you see the 9 EMA cross over the 20 EMA. That shows bearish. That's a sign of the bears coming in. And then when you see the 9 cross over the 20 EMA on the way up, that means that it's a bullish setup. So I'll go ahead and show another example. Let's go. Where are we here? Okay, market open here. We're gonna draw. So we see obviously 20 EMA crossing over the, or 9 EMA crossing over the 20 EMA here, right at market open. So what we're gonna do is take the 630 candle and 635 candle, mark out that range here. Here I'm gonna drag this here, so we can see the top of the range right there, bottom of the range right there. The first two candles. Here we do not get a close. Although it did wick out, it did not close below the first two candles, the range of the first two candles. So when we did get that is right here. And that means that the next candle, the open of the next candle, is where we place our short, is where we enter the market, we'd mark it in. Again, place our stops above the wick. And then go for minimum 1-to-1. And here you can see that we would have taken that as well. You can go for a 1-to-2 on this one as well. Take that. So I'm going to experiment as time goes on about scaling out and how to properly scale out of trades with micros, as I'm going to do all of my trades in the micros. So maybe, you know, go in with 10 micros and then take out half of my position after a 1-to-1, and then let the rest go, and you know, maybe take out 3 more at a 1-to-2 risk reward ratio, and then let the other 2 contracts go. That's something that's I'm gonna adapt to over time and kind of figure out over time. Here we'll just try to find one more. That was a news day, I believe. Yeah, so we'll keep going. 6. Yeah, we'll take this one. Okay, so 9 crosses over the 20. Go ahead and mark out that 630 candle, top of the range there, bottom of the range there. And even on an example like this, where it's an extreme bearish candlestick, it closes this far down. That doesn't change the strategy. We still enter in on the next play there, the next point. Although now I'm looking at it, this is probably a trade that I wouldn't take because it did close so bearish. And then if we wanted to use my strategy, still it'd be a 116 point stop loss, which makes it very difficult to go for a 1-to-1. Although in this specific case, I could have, you know, it would definitely work. It's definitely a lot riskier. So this is kind of a day where, you know, maybe I just watch the markets run and, you know, probably would take a seat and sit it out. I don't think I'd enter in there. So yeah, that's kind of basics of my strategy and kind of why I wanted to start this. Again, tomorrow we're gonna open up here somewhere and you know, target yesterday's lows or yesterday's highs, and we'll see which direction we go. I'm assuming we're gonna be bearish. I mean, looking at zooming out, I mean, it's been going a downtrend all week and last week as well, so it's just kind of been coming down. So I'm assuming we're gonna continue to go lower. But yeah, I just wanted to come on here and make a little introduction video and explain, you know, what I'm starting this channel for, my strategy, and yeah, I'm excited for this journey and to do it properly, and yeah, just hold me accountable again and make sure that I'm trading properly, trading according to plan, and staying disciplined, get my psychology right, all that stuff. And it's gonna be daily updates. I'll be posting on Instagram as well. So yeah, look forward to, you know, progressing on this journey. And yeah, thanks for watching.